let me cover the risk disclosure first. Okay. You all know trading involves risk, right? You should only invest capital you can afford to lose. Past performance is not indicative of future results. Any trading strategy discussed here today is for educational purposes only. If you have any concerns about the risks, we encourage you to consult with a financial professional before making any trading decisions. So in today's webinar, we just covered the risk disclosure. I'm going to introduce you to who we are at FFR Trading, in case you don't know, and what our role is here. I'll formally introduce Keith and Vlad. I think you can see them on your screens already. We'll get into the details of the Predictive AI for Dynamic Markets program, and we'll have a discussion or a Q&A discussion with Vlad and Keith. And then I'll give you a summary of all the course details and the special bonuses for everyone who stays until the end. And of course, the special offer that we have for you all. All right. Who we are here at FFR Trading and what is our role. So at FFR Trading, we specialize in connecting traders like you with vigorously vetted trading strategies and programs. Okay, our role is to ensure that you have access to strategies that have been tested for performance, reliability, and risk management. We work as your partner in navigating the trading landscape, providing the tools and resources that you need to succeed. And if you do give us a call at some point, or if you need any help, here's some of the team here at FFR Trading that would stand ready to assist you, some of the strategists that you'll probably come across as you work with us here at FFR Trading. All right, it's my great pleasure to introduce our featured guests. First, I'll bring in Keith. Keith, you've got a lot of experience here, over 20 years. I know you've been a market maker, a proprietary trader, a hedge fund trader. But I really wanted to ask you, what is it about your background that you would like folks to know, and what kind of brought you to this path, and how you got together with Vlad to create this program?
Absolutely. Thanks again, John, for hosting us today. So we've got a good summary of, I think, my background here. I graduated from the University of Notre Dame about 20 years ago with a degree in mathematics and economics. So financial markets was just kind of a natural fit given my background. I'm really interested in data analysis and trying to manipulate numbers to try to find patterns, looking for probability of success and things of that nature. Throughout my career, I was working through really understanding the nuance of options, initially as a market maker down on the CBOE, and then eventually off floor trading basically every major options market in the world at this point. CBOE, ICE. I traded gold and silver as a portfolio manager for an options book with a proprietary trading firm as well. After getting my MBA from the University of Chicago in analytic finance and econometrics and statistics, a lot of complicated number stuff, I joined a CTA, which is a commodity-based hedge fund. And commodity-based hedge funds are interesting in that they use a lot of technical trading in order to understand the direction of market flow. By combining technical trading or signal-based trading, i.e. directional trading, with options, I got really excited about this opportunity to leverage the projected move in the most efficient and highest expected value manner. So working with these high-level professionals, I started working on my own systems and started into the educational space about almost 8 years ago now. Since I found that a lot of people have directional biases, but don't always have the best implementation. And I knew that with my background, I could really help people trade smarter with their directional focused trades. So as I was going through this process, I just knew I wanted to have the highest quality directional signals. And with the advances in artificial intelligence that have been prevalent in the market, pairing up with somebody that had a really strong financial engineering, artificial intelligence, trade signal-based background was absolutely crucial to me in order to find the best way to trade these markets. And that's how I ended up starting to work with Vlad here. And we've been spending years developing these signals and developing these concepts in our goal to seek out the best expected value trades as a way to really leverage the market movement.
It's fantastic, and we've talked about this before because we've worked
Yeah.
together in the past. I've worked with traders for over 25 years, from Schwab to my own stuff, but, when you go through your background, it's quite impressive. It's probably one of the most impressive backgrounds of any of the traders that I've come across. But not to be undone, your partner there, Vlad Karpel, Vlad, you've got a pretty extensive background yourself, and this is kind of the first time I've been introduced to you. But tell us a little bit about your background and how you came together with Keith here.
Yeah, so thank you, first of all, for the opportunity to be here and to present. My background is a little bit different. I got my bachelor's degree in biochemistry and master's degree in computer science. And I started my career in the technology side. So I was a CTO of several publicly traded companies. I was the first employee at Options Express. Options Express was one of the first brokerages firms here in Chicago to allow kind of discounted commissions on options trading and specialize in options and futures trading. So they hired me to build technology, build a website for them, and I was there from day one and until after they went public. And then I worked at several other hedge funds here in Chicago. One is the Big Six and several other broker dealers. So my passion always been in fintech space. And when the company went public, I decided, I tried to have my money managed by Vanguard or Schwab. I quickly realized that, I can do a better job. So I assembled a team of financial engineers that have background in physics, mathematics, financial engineering. They understand economic indicators. And we build the models to help me trade and manage my own money. And I've been doing that for over 20 years as well, managing my own money, and not only providing signals, but also trade them. And I'm super excited to, join with Keith, who gives, completely different background and experience. And I think in addition to providing signals and have a quality signals, you do have to have experience of a hedge fund manager or a professional trader that can help you structure these trades correctly.
Yeah, fantastic. And again, very impressive. You're really a trailblazer, in leveraging technology to improve trading outcomes. So guys together, Keith and Vlad bring a wealth of, expertise and innovation to the paid program. Again, which combines the power of AI with the dynamic market analysis to identify those high probability trade setups. So what we're going to do first, let me go back one here. We're going to discuss some of the academic principles that form the foundation of the paid program. We'll share some of its performance metrics since inception. And after that, Keith and Vlad will present a comprehensive overview of the system, walking you through how it works, and why it's such a game changer now for traders at every level. Then we'll open it up for Q&A. So after Vlad and Keith are done, we'll open it up for a live Q&A session. So be ready with your questions, and we'll get to as many of those as we can. And then after the Q&A, I'll explain everything included in the paid program. We'll share the exclusive offer that we have for you today. All right, so let's go over some of the key features and the performance of the paid program. Now, these numbers are based roughly on a $10,000 account size. Where we're allocating approximately $1,000 to $1,200 per trade, and these numbers are non-compounded. Okay, and you can see the figures here. The monthly average of 13%, with an annual average of 152%. Right now, you think about that on a $10,000 account size, you're averaging about $1,300 in profit a month. It wins about 60% of the trades, with the average winner around $389, the average loser just $247. All right, so the winners are going to be bigger than the losses on average, and a profit factor of 2.45. So guys, whoever wants to kind of field this one, anything about these metrics that you want to highlight, or anything that you want to talk about as far as the performance summary goes here?
Sure. So one of the big things I think that when you're looking for a trading system or something that can be reliable for compounding returns over time is there's a trade-off between the probability of success and that return on capital. So when we can find a system that has bigger average winners than losers, as well as a high win percentage, like 60%, that is a very powerful trading system to me. So there are systems out there that could generate maybe a 90% win rate, but the wins and losses are actually skewed the other way. What we wanted to try to achieve is something that allows traders to find a positive profit factor, a higher win rate than loss, and in a strong sense, not just like by $1 or $2, along with that strong win percentage. And then compounding those returns allows for that high monthly average and annual average return.
Right, fantastic. And that's, that's kind of the holy grail, if you will, is finding something that has a reasonable win percentage, but at the same time, the average winners are going to be larger than those average losses. Right? It's not easy to find or develop in this case, but you guys have done it here. So some of the key features of the program. Now, you're buying outright call options. So we're not buying puts here. There's no spreads, right? We're just utilizing call options, correct?
Correct, yeah.
Okay, 100% AI logic. So you've got it all programmed basically to do the heavy lifting for you. And then Vlad, I'm sure, is going to go into a little more detail on that when you guys kick off your presentation here. Focuses on highly liquid stocks and ETFs, which obviously is important when you're trading options, right? It's mechanical and rule-based. Now, you do average about 8 to 12 trades per month, right? Which, for those that, like to have a good number of trades, this certainly will provide that. It's short-term moves. You hold it for 3 days, all right? So you're in, it's a 3-day hold period, and then you exit basically no matter what. Now, is there any other trade management that goes into that? If you're in profit, you still close it out, or do you exit half the position and hold? How does that work?
Yeah, so, with this, I ran through a number of different scenarios on when to take the profits, when to cut losses. And at the end of the day, the signal was always very strong for that 3-day holding period. By adding in some like emotional or, discretionary trading elements to it, I actually found that it gave a worse return. So this AI logic removes the emotion from trading and that potential risk of making a poor decision in the trade. So we hold it by the system. We follow the rules precisely in order to make sure that we are achieving the best possible result.
And I love that answer. And those of you watching today, I hope you can really appreciate, I'm sure you do, using something that's going to help eliminate that kind of emotional aspect of trading. And let Keith, Vlad, and the AI do the heavy lifting for you. And so it says here, entering on Tuesdays and exiting on Fridays. Is that the case, or is that?
Yeah. So we wanted to simplify this down since we know that a lot of people are busy in their days. So by having a set schedule of looking at Tuesday afternoons and exiting on Friday afternoons, it takes away a lot of that management of sitting in front of the computer for 8-9 hours a day, staring at the screens, waiting for that next trade implementation. Now, of course, I'm doing that and Vlad's doing that every day anyway, but not everybody has that opportunity.
Right. All right. So that's another benefit that I would see is like you said, you can kind of have a set schedule. So when those trades come out, and you know when they're going to be exited. So I think it can't get more straightforward and simple than that. All right. So let's go ahead. We'll go ahead and dive into the heart of today's session. So Keith and Vlad, thank you for joining us again. We're going to hear more about your revolutionary paid program. So Vlad, I'm going to get ready to switch over to you.
Okay.
And you should get a little pop-up on your end there.
Let's see.
And then we'll just make sure that everybody can see your screen when you're ready.
Screen. All right. Let me know if you guys can see it.
Looks good to me.
Yep.
All right.
All right. So, as John mentioned, this is the Predictive Artificial Intelligence for Dynamic Markets. This is a program that Vlad and I have worked tirelessly for, just trying to bring the best quality trading system that we can, given our backgrounds. Now, You can see me on the left corner or on the video here. I'm the CIO of Yellow Tunnel and president of Option Hotline, and of course, Vlad, the CEO and founder of Yellow Tunnel. And we're really excited to talk through more of this program with you. Before we do that, we're going to go into some risk disclosures as well. I know that FFR already mentioned some, but as a reminder, options involve substantial risk and are not suitable for all investors. Yellow Tunnel and the presenters, Vlad and myself, not investment advisors, we're not registered with the SEC or FINRA. If you do have questions about your own personal financial situation, I recommend you reach out to a registered financial advisor to help you along your journey. The information in this presentation is for education and information purposes only and should not be considered trade advice. And you should keep in mind that the presenters of this video or the team at Yellow Tunnel may have a financial interest in the securities presented and the trade ideas that we are coming up with through this system. And with that, I'll hand it over to Vlad.
All right, thank you, Keith. Just a quick summary of what we're going to talk about. I'll talk about artificial intelligence, right? What is our edge? Where are we generating the alpha? We're going to talk about why use options for risk management, for leverage. Talk about data analysis. When do we generate these signals? How we generate these signals? We'll deep dive into option analysis, some of the more advanced topics that Keith will be able to cover with his background, extensive background. We'll go over some of the recent trade examples, both winning trades, losing trades, and I'll cover towards the end what's going on in the market, what to expect going to the end of this year. We have a few weeks left, going into this Christmas rally potentially, and then finally what to expect next year. So from artificial intelligence, I'm super excited. Obviously, I have a master's degree in computer science. My thesis was actually in artificial intelligence, writing like the first artificial intelligence, which I got my master's 25 years ago. So this is not a new field. It's just there has been a lot of advances in the past on that field, in this field. And why does it work? Well, first of all, we have a team of financial engineers that have access to the latest advances in artificial intelligence. So every year, especially with ChatGPT, not only do you have advances in processing language and multi-language models to process, ChatGPT type of queries, but also to train and learn on the data, which is the financial data, stock prices, earnings, fundamental technical data. And what's exciting is that as I see the evolution from the past 25 years up until now, is the models can do more and more work for you. What I mean is before, I would actually have to create my own grouping, right? I would have to say that Microsoft and Google and Nvidia are highly correlated stocks. I mean, they can diverge for a little bit, but for the most part, they move together, right? And banks like Citigroup and Wells Fargo and maybe Morgan Stanley, some of the wealth management companies also work as a cluster. And then I would have to do it manually. Now with the latest advances, model can learn and make its own decision. What is the appropriate stock to trade in which group, right? And we are scanning over 2,000 names, all of the optionable stocks, all the S&P 500 stocks, all the stocks that have weekly and monthly options and trade and exchange. We put them in groups, right? Maybe interest-sensitive groups, maybe momentum or high beta stocks. And then model finds the best algorithm and the best model available out there. So the companies like Microsoft and Google, Nvidia, they're building enormous libraries of these latest advances in innovation in finding what is the best algorithm for a different cluster of stocks to analyze and find the signals. And we run this every Sunday, right? We run it every Sunday. They generate signals, right? And then you have different layers of due diligence that Keith and I do. We're based on our own view on the market and macroeconomic conditions. I'm more of a top-to-bottom approach. I do believe looking at the interest rates, maybe the most important chart that you should be looking at. But then I would analyze the stock signals and make a decision with Keith which of these stocks are appropriate for the current signals, appropriate for market conditions, and which are not. Right? So we're leveraging, obviously, computing power. We're removing emotions out of this. I never trade stocks that do not have signals, right? Because I think signals and finding the best model can find the patterns in the market that Keith and I cannot find just by looking at traditional technical analysis, moving averages, and RSI. And obviously, with latest advances, you can see that artificial intelligence is the future. I told my daughter to make sure she takes computer classes to understand how to write code, because I think AI is here to stay. I think we're probably in the beginning, like maybe, first, second inning, and there's a lot more to go in the next few years. So I think AI and combining qualitative. So you have a technical analysis, but qualitative analysis. Artificial intelligence systems are still not advanced to kind of completely replace Vlad and Keith. I think some people hope that it's going to happen. I don't think it's ever going to happen because there is a IQ, but there's also emotional intelligence, right? Training psychology, which models cannot be trained on, not at least in the near future, right? So you do need to have a technical analysis, but you have to have that qualitative analysis, not only from macroeconomic conditions and but also from the training psychology point of view.
Absolutely. Yeah, and with that, we then go one step further. So not just having the signal for which stocks we think are, or the AI thinks are going to be bullish for that near-term future. We want to then try to make sure to leverage the returns. And so we utilize options, but options have other risks from stocks. So options do have traditionally higher execution and commissions than stock trades do as a leveraged contract. There is assignment risk for short options. Now, the system that we're working on right now with paid, we don't apply short options positions even via spreads. Part of the reason is we're looking to simplify the trade to the nuts and bolts for that short 3-day holding period. That said, if there are implementations that you like to do for your own personal account and you have a short option even via a spread, you do have that assignment risk and you should always keep that in mind. The long options do decay over time. With a 3-day holding period, it should be minimized somewhat, but they will decay in value because they have an expiration date. And then finally, volatility. One of the main inputs to an options model is that implied volatility, which is the expectation for future movement. When a stock starts to move and an option starts to generate some significant returns, oftentimes that implied volatility will increase, which can add a little bit of a kicker. At the same time, if the stock doesn't move and implied volatility is falling, that can be a negative for those long options. All right. And with that, let's do a little comparison of options versus stock here. So one of the big things that I like to do is just to look at how an option performs at expiration relative to an overall stock position in my portfolio. Stock can be a very valuable tool and it can be a very good leverage tool if I'm actively day trading and rotating positions. But if I have, so let's say, a $10,000 account like our model portfolio, if I was looking to invest in a $100 stock with, say, a 20% rally projection over the next month, that's a pretty good return over a month. If I can achieve that over and over, I'm going to have a pretty good year. But if my stop loss has to be set somewhere below so that I don't just wipe out my account, if I'm setting that stop at, say, $90 a share, I'm risking $1,000 with a projected profit of $2,000. So good R&R. If I have a 50% win rate, I still have a high expected value. But if I wake up tomorrow morning, and let's say the stock had earnings and it's trading at $70 a share or worse, they have some sort of accounting fraud and it's lower, I can lose more than that $1,000 that I thought I was defining my risk at. So always keep that in mind. The prices don't trade continuously where every price point has to get hit on the way down. That can actually impact my my exit execution. On the other side, we can look at an options trade for this. So with the same idea, down one slide for me, Vlad. Yeah. So if we do this as an options trade, and I look at a call option, which gives me the right but not the obligation to buy the stock at $100 a share in this case, since I'm looking at the $100 strike price calls, anytime between now and expiration, that's going to trade at a premium. Because I've got this optionality, I've got this leverage, and I've got this defined risk, I've got to pay something for it. So for this hypothetical, we'll say that that option is trading for $5 per share. Now each contract represents 100 shares, so each option, $500. If I want to define my risk to that same $1,000, I can buy 2 of these options for $1,000 and have a leveraged upside position. So you can see that as the stock goes higher, I'm now holding control over 200 shares of stock because I have 2 call options instead of the 100 shares in a stock position. To the downside, the max I can lose is the premium that I paid. Because of the nuance of options and that premium I'm paying, though, there is a trade-off, and we'll go to the next slide to show that payoff clearly here. With the options, I need to see the market rally in order to generate a profit. So because I paid $5 per contract, I need a $5 rally just to break even. Now with our system, I'm not holding the expiration. So we're not decaying that full extrinsic value, that time value, that volatility value. I'm actually just looking to get the leverage without getting too much of that decay element. But if I were to hold it all the way to expiration, I have to see a rally of $10 to be the same return as stock. And if I get more than that, the options leverage position pays off better. At the same point, if we wake up tomorrow morning and the stock's trading $60, I'm out for a $1,000 loss instead of $4,000. And on top of all of that, I've got $9,000 in cash if I put $1,000 into the options. So I know that I can diversify my portfolio and look at many different ideas rather than being fully invested in one stock and having to wait to exit that trade before I make my next position. And that's really the crux of why we use options. There is leverage and there's defined risk. So we want to do that on every one of our trades, and we want to add that possibility of diversification. When I have an outright call position, I can control more of the stock. The example I just said was 2 call options, 200 shares of control rather than 100 shares of stock. That's the leverage component that I'm looking for in order to accelerate my returns. And then on top of that, that risk management. Defining my risk by the contracts selected, and the premium I'm paying. I have to utilize proper risk management and portfolio management techniques, of course. So I don't want to put all of my money into one options position, knowing that if the stock doesn't rally, I actually could lose money. Or even if it does go up but not enough, I could still lose money. So I want to have that diversification element, and that comes back to that risk management, portfolio management that we'll touch on later. Now, as we go through the actual paid system, there are a lot of deeper dives into options analysis. So what I've got here is the term structure of the options for one individual name. They've got this nice curve. It's the smile, it's the volatility curve, it's the skew curve, whatever you want to refer to it as. It shows you where the implied volatility of each of these options is in the current market conditions. So depending upon the time to expiration, certain implied volatilities are higher and lower. Now, what we're trying to do is find the best source of leverage that increases the probability of success and defines that risk for the cheapest execution. And that's what doing all of this options analysis is really all about. That comes from those years of experience. Even further, if you go down one more, we've got the options analysis where this is the VIX term structure. So if I look for long-term options, traditionally, the VIX is in what's called a backwardation, where longer-term implied volatility is higher than short-term implied volatility. Well, that actually can generate some good opportunities because we know that if the options are lower implied volatility, it means the market's predicting lesser movement. So if the market's predicting lesser movement in the short term, I can use shorter-term options and get greater leverage. They're also going to be cheaper because there's less time to expiration. When we go into a contango market, which happens where the shorter-term implied volatility is higher, that's usually happening when the market's in a panicking mode or a big event is coming up. And that actually can still be beneficial to utilize something, near the front of the curve because that long-term option gets hit by much smaller moves in implied volatility. And I want to try to reduce that risk where I can. And with that, let's go to some recent trades just to give you an example of how this system can really leverage the return of even small moves in the market for short time periods. So the first one we've got here is actually a trade from August. Right after that non-farm payroll panic, thinking we may be going into a recession, we started looking for some opportunities outside the market. And this was in a financial name, State Street Corporation. Entry on August 20th, exit on August 23rd, simple 3-day move, and you can see it was a nice move over those 3 days. I've got the trade details on the next slide just to give you a illustration of how this performed relative to a simple stock position. And this furthers, I think, our explanation of why we use options. Had I entered via the stock on the close, I would have been in at $80.42. Over 3 days, about a 4.5% return. However, utilizing options expiring 1 month later on September 20th, the $80 call, which gives me the right but not the obligation to buy the stock for $80 a share, I could be entering at $2.40, exiting at $4.85 3 days later, over 100% return in just 3 days. So on a 4.5% return on the stock, I can see 102% return on the option. And that's that big leverage component that we're really excited about when we see an AI-generated signal. Of course, this is only one example. We've got many more. Here's a good example of what happens when, sometimes it just doesn't work out the way we expected. This is a very recent trade. It was the week of Thanksgiving. We were seeing some positive signals out there in the financials. M&T Bank was one of them. Entering on Tuesday, exiting on Friday. Really only about a day and a half of market behavior, but nonetheless, it fit the system. Looked like the financials could go higher, but in this case, it did not. So the entry, as we look at the details on the next slide, will show you that a November 26th entry and a November 29th exit was about a 0.3% loss in the stock. Now, because these are leveraged contracts, the loss in the options was a little bit higher there, 13%. So it is still going to be a multiple of the winners and the losers. But if I can have that higher win rate, I can obviously offset that. And if I can have that higher return percentage, I can certainly offset that. And that's a prime example of the next trade. Same exact time frame. We had Bank of New York Mellon, another financial. We hit a new high on Friday after Thanksgiving. So we had a 3-day move that was positive. So two different stocks, same sector. This is why we like that diversification, of course. And if you can go down one more, we'll see the details. In that 0.7% return over 3 days, this stock generated a 37% return on the options. So I think this helps give you an illustration of where there is a balance. And yes, there will be some losers, but when we can get those winners and have them achieve higher returns and with a higher probability of success, it really sets us up for great long-term success and compounding of those overall returns. And with that, I'm going to hand this back over to Vlad to talk a bit about the current market conditions.
All right, current market conditions. I decided to do a live presentation. I think it's always better. So you could see that today, looking at the QQQ, we're making new highs. There has been a debate whether we are rotating into the value stocks and stocks like Netflix and Meta are going to fall behind in NVIDIA, or whether we can, rotate into cyclical names like banks. So will the banks lead the market? Like Wells Fargo had a very nice rally after the election day. And you can see with yield curve normalization, you can see that the bank stocks have been leading the market. But now rotation, at least short term, right? Depends what period you discuss. Short term has been back into technology names, high beta stocks like Meta, Amazon. They're leading the market today. And I think that rotation, that debate will continue not only until the end of the year, but also well into the next year. Right? Goldman already announced that they're projecting somewhere 10 to 15% gain next year. So we're going to be in the third year of a bull market after the recession, and the rally will continue somewhere 10 to 15%, assuming the core scenario is soft landing, right? That the interest rate will continue to go lower, inflation is going to also continue to go lower, and the Fed will be able to fulfill dual mandate of price stability and full employment. So Spiders is not breaking out to the new highs, but you do have technology breaking out to the all-time highs. And the past 2 years debate was, broadening of the market participation, where only momentum stocks were leading the market, including the semiconductors. But now you have small caps making new highs, marginal new highs. If you zoom out to weekly chart, they're making marginal new highs on small caps. But mid caps already made new highs and have a decisive breakout outside of the 2021 highs. So you have a broadening of participation. You have interest rates that are stable, but trending lower. Right. Short term, we had a big rally, especially after the new administration that could be net inflationary due to their policies, right? Additional tariffs that could cause inflation, but buying on the rumor, kind of selling in the news. We have CPI data today, we have unemployment data today, so it looks like we're trading long term and medium term. We're still trending lower, and as long as we are not jumping in interest rate, as long as 10-year yield is not jumping to 5%, with the fear of resurgence of inflation, or we don't drop below 350 with the fear of unemployment rate going up, and people cannot find jobs next year. Then the core scenario is the pattern of higher highs and higher lows, and you can see that being reflected in Bitcoin, right? Risk on trades, whether it's a Bitcoin that broke through 100,000, everybody's talking about 200,000 by end of the next year, or whether you look at the even Arc Innovation, you can see we have a significant rally since the election, right? We went from 46 to 61. So definitely a risk on trade. People want to take risk. IPO market is also finding a little energy, and high yield is also stable, continues to grow higher. So everything points to kind of higher highs, higher lows, assuming we don't have a black swan event. The only elephant in the room that I like to discuss is the semiconductor. Right? Semiconductors usually leads the market. Right? This is a new operating system. You need NVIDIA chips to power AI. But the multiples are very high, and people start questioning. Right? Before, if you say AI during the earnings announcement, right, during your press conference, if the CEO says AI 10 times, the stock doubles, right? Whether it's a Dell or Pelletier or NVIDIA. Now people scrutinize, all the investments. Is there a return on investment? So you can see stocks like Dell, stocks like AI, they're moving lower because they do not justify some of the current valuation. So we'll see if that trend continues into the next year. I think the momentum probably will deteriorate, maybe the first quarter. And you can always go to yellow tunnel services, to not only to see orders and positions, right, in the paid program. So under your login, you'll see your paid program, but you can see all of the orders, right? There's live with specific entry and exit points. You can see all of the positions. I probably timed out because I talked too much, but let's see. Let's try again. Paid. Right, so you will see all of the stocks that we traded. You will see all of the option ideas that Keith discussed for those short-term option trades. And you'll be able to see all of the orders. You will be able to see all of the positions. You can enter your phone number and get an SMS message. You can see history of all the signals. And you can see the recordings, live trading room recordings for each of our sessions that Keith and I are covering. And then you can go to AI analysis, right? The same model that provides signals. Maybe we don't have a signal on NVIDIA, but it's a popular stock or Coinbase, and everybody wants to know what NVIDIA is going to do. So we're going to show you the long-term trend, but NVIDIA long-term trend is still intact, right? Short-term trend, obviously, it's under pressure and can continue to go under pressure. So this is all part of this yellow tunnel subscription. You can analyze your own stocks. You can participate in live trading room and ask Keith a question, ask myself a question, and we'll be more than happy to answer any of your questions. Right? Again, this is synchronized. This is not hypothetical trades. Everything on yellow tunnel and all the performance that you can see on the slide, these are real trades, right? Done in the broker-dealer accounts. It's synchronized through an API. You get specific SMS message, entry, exit price. We have daily and weekly commentary that will explain our view on the market on daily basis. On yellow tunnel, I do it on daily basis. Keith will go over every week in video specific positions. He'll touch base on that, and that's what we're doing in the yellow tunnel. So you have a combined qualitative and quantitative analysis, and that's, I think, the biggest value out there, is that not only do you have someone who has background in technology, but in addition of that, you have someone who has Keith, who has proper training in trading psychology, quantitative analysis, and trading techniques.
I mean, and if that wasn't enough, I guess, we always like to focus on the educational side of things. So, what Vlad just did, talking through some of the market conditions, that's very similar to what a starting point would be for your normal live trading room. If you need to have more education on options as you're going through this program, there's a master course here that I put together. It's 12 parts, hour long each. So 12 hours of educational content along with the ebook, Think Like a Market Maker, Profit Like a Pro, which is 130 something pages on all of my options and knowledge I could come up with for you guys to get a good baseline on not just how to trade options, but how to trade complex option spreads. So I go through market psychology, buying and selling options, verticals, condors, butterflies, straddles, strangles, about any sort of strategy you might look to apply to your trading philosophies. Of course, focusing on risk management and position sizing as well. So this is a big value add-on to make sure that you guys have all the education that you need as you're going through this program, because I think the general goal for everybody involved here is to trade smarter. And that makes us all much more profitable. Excuse me. So with that, finally, we've got the weekly paid trade signals. So, John touched on this before, but as a reminder, you're going to get options ideas every week, or almost every week. We do have some weeks where the market conditions just don't line up, but 8 to 12 trades per month with real-time entry and exit signals, the weekly market update videos, that live trading room that we were talking about, weekly live strategy events, trend analysis videos, discipline videos, just about everything that you can possibly need to have a comprehensive educational resource for your options trading. And that's really the end goal here, is to get that comprehensive, top of the line, state-of-the-art AI generating signals. What more could you ask for, right? So with that, I think we'll bring back in John here and we can talk through some more concepts about this system.
And if you guys have any questions, please ask them. John will be able to let us know, and we can be more than happy to answer any questions you might have about the program or market conditions or any other question.
Yeah, absolutely.
Yes, absolutely. Guys, incredible presentation, and I hope those that have joined us here really appreciate the fact, first of all, guys, you can see you're dealing with real deal traders, right? These are real trades, real executions, real money, okay? So this cuts through all the BS that you're used to, right? This is the real deal. So if you have questions, go ahead and post them, and I will relay them to Vlad and Keith. And guys, you can leave your charts up and stuff in case somebody asks a specific question about a specific stock or whatever that you need to go to the charts for. So guys, go ahead and post your questions and I'll relay them here. So Daniel's got a question here. He says, it's an interesting question. What will happen as more and more trading in the market becomes driven by AI, and now numerous AI engines are trying to outsmart each other? How can one maintain an AI edge, quote unquote, at that point?
Yeah, I can take that question. So you do have, models have to train, and you have to provide quality data, right? It's AI cannot work without the proper input data. So this is where Keith and I come in, is because we have a trading experience and we can tell the models what to train on, right? Whether it's technical data, earnings data, open, close, volume, whatnot. So the input is very important. Obviously, looking at the new models that are available out there on a weekly basis and trying to find the best model that fit is very important as well. Robo investing is out there, but I think the issue is that since markets are still random and there will always be random, emotional intelligence, proper management techniques, but more importantly, when the markets will have drawdowns, whether it's 5%, 10%, 20% next year, nobody knows. But in a live trading, we will go through the techniques to help you navigate the market volatility. And I think that is something that AI cannot do, right? Because AI can be trained in certain periods of time, but there are always black swan events, right? There's always new elections, there is always geopolitical risk, wars, and at those times when you do have 5 to 10, 15% drawdown in the market, how well can you manage your portfolio? And this is where Keith and I will come in these live trading room, in these recordings to help you navigate the market volatility.
All right, fantastic. Now, Arun asks, AI-based predictions on NVIDIA, and I think he's referring to the module there that you have through Yellow Tunnel, where they can analyze a stock using AI, which I think is an incredibly powerful feature, guys, if you think about it. you can punch in any stock, push a button, and have the AI do the analysis for you. Can you talk, Vlad, a little bit about what is kind of built into that? When they hit that button and they input their stock and they hit that button, what all is being calculated in there?
Yeah, so the same model that generates the signal, we actually have, it's a patent pending. So we applied for a patent. You can't patent the algorithm, but you can patent how you derive the signals, the inputs, right, the outputs, and what data you are feeding into the AI models. That you can patent. So we have a patent pending, and a lot of it looking at and learning on price movements, and going back to geometry classes, right? Or trigonometry, I guess. You have sine, cosine, right? There are certain waves, there is certain momentum that the stocks have. Some of it is noise, but some of them are long-term, short-term, and medium-term trends. So what you've seen on your screen is that for short-term, basically, right now NVIDIA is trading at 139. The model ran last night and basically says at 135, NVIDIA is oversold. So whether you want to get into the position or get out of the position, whether you want to do short-term or long-term trading, NVIDIA is volatile, right? $8 difference. So on $135 stock, this could be 5-6% difference. So very often what we do, we buy at 143 only to see that the stock drops back to 135. So these are clues and guidelines that the model provides to you that says, for today's session, if NVIDIA drops close to 135, consider it you want to buy, right? Or you want to close your short position. Or if it reaches 143, it's probably overbought and you might want to go short. So you have these suggestions, right? Open close price, these are the predicted open and close price, just also give you some guidelines. And long-term trend. So you have a short-term trend where we think NVIDIA can be, right, in the next 10 days. 140 has been a very strong support and resistance levels, right? If you look at the chart of NVIDIA, you can actually see, just from, kind of a traditional technical analysis without any major, you can see that 140 is kind of a line in the sand. This was the high in June. We broke out of it, NVIDIA broke out of it, before their earnings, and after the earnings, it's kind of just traveling this line. And model automatically identified this, right? Without any biases, without, maybe, Vlad looks at June high, maybe Keith looks at the September high. We all look at different data, right, and have different opinions. The model identifies right away that 140 is your key level. And that's what the next 10 days are. But if you zoom out and look at the long-term trends, right, if you look at the weekly charts, right, or monthly charts, right, then the picture is a little different, right? It's a straight line to the moon. And that's what the model also reflects, that the strong momentum in NVIDIA is still intact.
All right, fantastic. Thanks for walking us through that analysis. Now, Robert asked a very important question. He said, will you identify the stock we'll be trading, or do we have to pick the stock on our own? So you're basically going to have the ability to do both, correct?
Yeah, so with the paid signals that go out on a weekly basis, we identify, a handful of names that you would be getting the signal for that model portfolio of how to really leverage that AI from what we're looking at. At the same time, if you have something that you like, you can look at it via the system that Vlad was just illustrating, or we can jump onto the live trade room, ask your question, Vlad and I can talk about it in further depth. So you've got many different ways to evaluate those stocks. If you just want to know what stocks our system is buying, that's there. If you want to get an evaluation of a stock that you particularly like, say NVIDIA, you can ask about it and we can talk about it further. Because like Vlad said, NVIDIA is not part of the portfolio for this week for the weekly, the paid trading system. That doesn't mean we don't want to talk about it. There are opportunities out there for everybody, and we want to make sure that you feel comfortable with what you're doing in your trading.
All right, excellent. And Fred wants to know, signal trades entered Tuesday, what time? And closed positions, what time of day?
Yeah, so we go for close to the end of the day, so usually about an hour before the close. That way people, if they are a little late on seeing the signal, I don't want to be putting things out at 3:59 Eastern, you got 30 seconds if you were deciding to copy the trade. You want to know about it about an hour before the close so that you've got plenty of time for managing trades as you will.
All right, and I'll answer Kevin's question. He asked if there's going to be a replay. Kevin, we did record this, and you'll be able to, I'll put up the number for FFR Trading and call them and request a copy of the presentation here. It says, David asks, are your models focused more on trend or mean reversion?
I think they're focused on both. Mainly they focus on finding the patterns, but also looking at the weights, right? So you can see kind of NVIDIA, I don't know if I can draw it here. It's NVIDIA pen, right? But you can see that there are certain moves, right, that are following in the model. So it looks at these models, and it looks for trend, especially long-term models, if you're making higher highs and higher lows, but it also looks at key support and resistance levels. Like if you look, when the stock is having a hard time breaking through some long-term resistance, it will show a negative trend, a negative momentum, right? Until the stock breaks out to new highs. So it does both, but mainly analyze more kind of a wave analysis. And again, for different stocks, it finds different models. So maybe for NVIDIA, this is the model that works well. But if you do,
Something crazy, or
say again?
you want a crazy stock or like a boring stock?
We can do AI. We can do crazy stuff like AI, right, where it fluctuates, from 36 to 44 every day. Or you could do something that's like Wells Fargo. The point is, and if you trade it long enough, you'll realize that there's no one pattern or one type of analysis that fits well for individual stocks, right? And then going back to my discussion. Some stocks are better to be analyzed by model A, some stocks are better analyzed by model B because they go through different cycles and they react to, some are more sensitive to interest rates, some are more sensitive to inflation, some more sensitive to geopolitical risk, to, which administration is in power. So that is the advantage of AI. It doesn't have a bias, and it literally picks every week. It says, well, for Microsoft, model B was the best model that worked based on our backtest. But now we're going into a new regime where interest rate might be, we don't have ultra low interest rate, now we have high interest rate, or we're changing from yield curve flattening to yield curve steepening. So now we have to adapt to this and find new models. And that's the advantages of AI.
So excellent question, David. Appreciate that because you really got Vlad to open up and explain. And Vlad, you did a great job explaining that. It's a very important point. Charlotte wants to know, with only calls, what is the risk management for drawdown if no puts?
Yeah, so because of the way that the signals are generated, we on average only have 2 or 3 positions on at one given time. So that on its own creates some portion of the risk management. Using options expiring in a month mean that we're rarely getting more than about a 50% drawdown on an individual name. Over the year, I believe I'd have to double check the numbers, but the max drawdown was about 20%. So it's definitely there, but the recovery period generally follows soon after. I mean, we've had some really nice weeks where, for example, the trades that were added yesterday, the combined return so far is $1,000 in one day. So 10% in one day. That's where we're seeing the bigger size moves is to the upside because of the way that we structured it. But there are also stocks that will go up even when the market's going down. And that's the power of AI is we generally have avoided the market in these big drawdowns. We had no trades the first week of August. So non-farm payrolls came out. We were all cash before that non-farm payroll collapse. We were all cash when the September non-farm payroll collapse occurred as well, I believe. Yeah, might have had one position on. At the end of the day, the system is supposed to know that people are concerned about the risk coming on in these outside events, and that actually helps us to avoid some of these potential downfalls.
And that answer kind of dovetails nicely with the next question, which I think you partially answered here already. But since it is a long-only program, how has it performed in the down market?
Yeah, so for the data that we've got for the weekly paid signals, we got back this past year, and like I said, we've had some down times during this market, and that does potentially generate a little bit of a drawdown, but that's actually been a really good opportunity when we've seen that happen. So one of our best weeks was shortly after the August non-farm payrolls. Let me just double check some of the numbers here. One moment. You got to pull back up my other spreadsheet. So from August,
we've got great news for
1st,
seniors.
we'll call it.
The Social Security Administration has
first until August 30th, so the month of August, the returns in the model portfolio were about $4,500, almost $5,000. So you can see how coming out of those dips is actually one of the best opportunities at certain times. Other times we just have that enjoyable compounding of returns, but when you get a little bit of whips on the market, that can actually generate really good opportunities.
All right, let me, I'll take one more and then we'll move on. And you guys can always get your questions answered. I'll put up the 800 number later, and you can always call in and ask if you didn't get a question answered here. We just have so many questions coming in and so little time. Let me pick up one last one here. Oh, is this, can this strategy be traded in an IRA?
Can take this one.
I mean, as long as you can buy options in your IRA, you know, any account where you can buy and close options,
we've got
positions,
great
yeah, you should be able to trade it in any portfolio like that. If you're looking for like, you know, specific advice on how to handle that, I would talk to your financial advisor on that though.
All right, excellent. Anything else you guys want to add before we move on here?
I think I'm good right now.
For us.
Okay, so I will, let's see.
You'll be the presenter now?
Yep, I'm gonna switch over here, so let me grab that from you.
Perfect.
And, right, just let me know you can see my slide now.
Yep.
All right, perfect. Okay. All right, so let's get into the premium advisory course details for the paid program here. What will we receive if you sign up here? You obviously get the trade alerts, again, sent on Tuesday, exiting on Friday. The positions are held for 3 days. You get the daily trading sessions, so members will have that login that you saw to Yellow Tunnel that Vlad utilized. There's education back there. There's that live trade the live trade setups, information on trading psychology, obviously a very important part, and predicted market climate for options analysis. You have complete access to Keith and Vlad's trading team via email or phone. So, you know, you're not talking to somebody who doesn't, you know the ins and outs of the program. You're talking to Keith and Vlad and their team that they've assembled to support you guys. The complete comprehensive education course. So it's not just the signals, right? It's the education that goes with that. We'll talk more about that as we go through here. Weekly market video update, and guys, jump in if there's something you want to add to any of these things that I'm pointing out here. But the weekly market video updates gain access and knowledge of the weekly trading activity. So you're always keeping folks up to date on, you know, what's transpired, how the trades are doing, what you're seeing in the markets, all that good stuff. Vlad did show you already the access that you'll have to the Yellow Tunnel trading room. All right, that is a live trading room. Like Vlad pointed out, these are trades that are being executed at the broker. It's a huge opportunity for additional success and trading opportunities. As you saw, you could punch in whatever stock you're interested in and have AI spit out its analysis for you. You do have access to third-party registered brokers for those of you that don't have the time. Now, they've made it pretty simple to execute these trades and a nice schedule for you. But if for some reason you can't do that, you can't be there, you will have access to third-party registered brokers. And that is, again, an option for those who don't have the time management available to self-trade, okay? And then finally, you do get access to us here at FFR Trading and our team. Our goal is to build you a portfolio, a well-rounded portfolio, non-correlated portfolio of different strategies, different traders, different strategies. All right, so you might have the paid program that's utilizing options to the long side. You might also be able to add commodities or some of these other markets that are non-correlated to help smooth out your equity curve. All right, so we stand ready to help you with that and guide you all the way, going over your brokerage statements each quarter. All right. Just getting a little bit of feedback there. I'm not sure what that is. So how do we work this? The partnership and success opportunity, we're looking to partner with you, okay? So there's certain things that we're going to look for, and that is, number one, we need you to provide your story. All right, so just how you found us here at FFR, how you found Vlad and Keith, whatever your story is, we provide that for us, and provide us your monthly broker account statements. Right, that's going to help us monitor your account. Obviously, all the information will be redacted if we use that to show other clients how other clients are doing in the program, and commit to a quarterly meeting. Right, so you sit down with your strategist. Obviously, you can do this virtually, and go over your portfolio. If any adjustments need to be made, whatever's going on in the markets, right? You go over that. And then if you're satisfied, provide us a testimonial, right? And you can go on our FFR Trading website and see testimonials of our actual clients and how that is. So, and then of course, refer us, all right? So if you're seeing success, go ahead and refer us to your friends, family, and so on. Here's just an example of a successful client here, Dr. Striegel, and his experience here with FFR Trading. All right, let's get into the offer that we have for you here. Time is valuable, so I want to set this up for you. This is for the first 10 members that sign up, okay, only, all right, and it's 10 members. If you sign up to Keith and Vlad's program, you're going to receive a free year of trading. So sign up for 1 year of paid and get an additional year free. They're also offering a $1,500 sign-up credit, okay? So they're going to reduce the amount of the program up front and add an additional year of trading, and a free bonus, and that is you're going to receive Keith's 12-week option course that's valued at $3,000. All right, that is not a made-up number, right? We did this session, and I sat in on some of these sessions with Keith that Keith did during this options course. And, if you are looking for a solid foundation and education in options, this is the course that you want to go through. And in fact, Keith, let me just pull up the 12-week option course and some of the key aspects of that course. It's market psychology, all right, when to buy and sell options. This is a big key. How to use option verticals, how to trade condors and butterflies. So it goes, well beyond just, puts and calls here, straddles and strangles, how to use them, when to use them, and the complexities of skew risk and strategies around that. And of course, risk management and position sizing. Again, I've sat in on this. Keith, if there's anything you want to add, what comes with this program and what they're going to learn, go ahead and add that here.
Yeah, I mean, I think that you've touched on it pretty well, and I touched on it a little bit before, but the general idea is that people, as you're going through your trading, you'll have different strategies for different market conditions. So if you have a directional bias, there is a certain specific type of trade you're going to be looking to do normally. If you have no directional bias and you have a volatility bias, that can be traded with the options. So that's a more pure options strategy if you believe that implied volatility is too low or too high, or that realized like markets can just chop up and down like we're seeing in AI stock right now. There are strategies for that. So I try to cover as many of these strategies as I can to introduce to people how they can utilize options in just about any way.
And this is a course it's a video course. So all the sessions that you did over that 12 weeks have been recorded. Right, and they still get the support. So if they have questions, they can contact you and your team to get their questions answered as they go through the course. So, guys, a really valuable add-on that they're throwing in here for you as an additional free bonus. is the access to the yellow tunnel, the aggressive power trader, for 6 months. That's valued at $582. You get the trade recommendations, weekly videos, watch list trades, weekly newsletter, trend analysis. There's videos. Again, so this is a full-blown, trading system in and of itself that they're throwing in here for free if you sign up for the paid program. The access to the live tunnel trading room, right? Vlad did cover that. Again, another huge bonus for you guys. It's not just the signals, right? It's the support that you're getting, right? The reduced tuition to the course and the program, the option course that you're getting that's valued at $3,000. Again, access to the live trading room and the yellow tunnel aggressive power trader. That's another program. You'll see it back there in the yellow tunnel when you log in, as you'll have access to all that. So what you need to do, and let me just go the piece from the live trading room. There's a kind of a track record up here. Again, this is as of December 5th. Okay, so it's pretty well up to date here, and you can see the return. The average return per trade, 37%. The number of winning trades, obviously this is not just, a handful of trades, right? This is over 2,000 trades that we're talking about here. 2,112 winning trades, just 403 losers, 9 break-evens, winning over 83% of the trades, okay? So just think of the value. Guys, just think about, if you've got money sitting in an IRA, we talked about an IRA earlier, would this help? Would adding just one of these programs we're talking about, the paid program, would that help? If your IRA is kind of going sideways, Vlad was pointing out, as we get through the year here into a new year, may the market start, topping out. And if that happens and you're in your 401k or your IRA and some of these other accounts, how are you going to handle that? What is your plan? Would be able to, if you could generate an extra 30% a year on your money, would that help? Or in the case of the paid program, over 100% returns on average per year. Would that help? Okay, we're not even talking about the education that you're getting and all the other stuff. So what you need to do, right? If you're one of the first 10 callers, it's 10 spots only, right? You have to call us. All right, I'll put up the numbers here. You can see them, the 800-883-0524. If you're outside the U.S., you want to use the 737-292-4425 because we do have clients and those that follow us around the world. You need to call that number. The reason you need to call that number is we have to make sure this is a good fit for you. We're not going to put you in a program that is not a good fit. Okay, so we do have other programs, and that's fine. We could go over that if need be. But we do want to talk to you to make sure this is a good fit. You also want to get all the other information about the programs. They can go over all the performance figures with you in detail. All right, so give us a call there, 800-883-0524. And again, outside the U.S., 737-292-4425. And you can also email us, support@ffrtrading.com. You'll speak to a strategist that has been trained. They're all market veterans, right? They understand how markets work. They're going to help walk you through these programs and everything that comes with them. All right, Vlad, Keith, anything else that you want to add to here as we begin to wrap up?
No, I just want to say thank you again to FFR and John in particular, and everybody that came and watched us talk through the markets. I really appreciate you guys taking your time, and I hope that there's something we can do to work with you to help your trading.
Yeah, same here. I appreciate, John, the time. I appreciate the FFR giving us the opportunity to present, and I think I'm excited about this program because I think this is the first time where we're actually combining both talents, Keith and I, in one program. And, we've been working already together for a long time on live trading room, but this is kind of opportunity to work side by side and make sure that, you're getting the best value from both of us.
Yeah, you're getting the best of both worlds, that's for sure. There's a lot of content here, guys. There's a lot of, not just information, but actionable stuff that you can utilize to start earning an income for yourself. Wayne just asked, what is the basic cost of the program? Wayne, give us a call. We do have to make sure it's a good fit for you. Again, let me put up the numbers here. That's the 800-883-0524. Again, outside the U.S., you can use that 737-292-4425. We do need to speak to you to make sure this is a good fit for you, though. All right, guys, so we'll wrap it up there. Give us a call. We've got 10 spots left. The reason we only have 10 spots is they can only have so many subscribers, that they're able to support. If they have too many people taking all the same signals, it can show up on the big bank's radar, and we don't want that. So we do have to limit these programs. So you want to call as soon as possible to lock in your spot and take advantage of all the bonuses that we have. Again, I'll put those bonuses up here again. Keith's 12-week option course. You get access to the Yellow Tunnel live trading room and a separate service. That's the Yellow Tunnel Aggressive Power Trader for 6 months. All right, guys. Guys, I really appreciate you taking the time to be here with us today. I'm sure this is not the last time that we'll do this. I'm imagining this is going to be quite a popular program. So I appreciate you coming in and sharing this with us. You guys, again, call in, only 10 spots. You got to get in there and lock in now. Those spots will move quickly. So again, have a great rest of your trading week, guys, and we'll see you back in the next presentation.
Thank you, guys. Thank you, everybody.
Thank you.
Ok, señores, vamos a cerrar la transmisión. Es un seminario que hace esta compañía Tsweet. Ellos siempre hacemos referencia de nuestro programa de estudio, de análisis y de cálculo. Para hacer anticipaciones, siempre lo usamos a ellos como referencia para compararnos, para ver dónde está el nivel de error nuestro, de avance o de retroceso, de lo que sea. En la tarde vamos a hablar otra vez sobre eso. Vamos a revisar las notas más importantes de lo que ellos hablaron. Estos son portafolios controlados por inteligencia artificial. Okay. Y ellos están vendiendo este programa de avisos, de alertas, que lo hacen todos los días. Son para mí la empresa más legítima que yo he conocido. Gente muy decente. Cuando dan órdenes de cerrar, te dan oportunidad a ti que se cierre, ¿okay? Que se cierre la posición. Nunca ellos cierran y después avisan. No, eso no lo hacen ellos. Es una acción criminal, pero muchos de esta gente que suministra información para entrar y salir tienen esa estrategia a su favor, porque tienen un grupo de perritos que lanzan al mercado con una orden que ya entraron y todo el mundo entra después, el precio se mueve arriba y entonces ellos salen y después dan la orden de salir y ya cuando ellos dan la orden de salir que empezó a corregir, ustedes están tratando de salir y casi siempre produce pérdida. Así que voy a parar acá esto